What's up guys, I'm Seb from fxcartel. If you're here, you're probably interested in the trading market and specifically the Forex market, and you're in the right place because I've got 10 years of experience and a successful proven strategy. And I'm doing this video for you today to help you develop and improve your skills with my latest tips and tricks on the market.
What I'm gonna do now, so I'm gonna stay on this one actually. If I was to look at this, if we are to see a reaction on this specific chart, my first solid target would be the 100 EMA right there. If we are to breach this and go down, I think that's pretty decent to assume that this would be the target. However, we do have this 19.6 level that I think could be slowing down my target area. I do some target area because I believe this could be helpful for you to identify the solid target. I know that some of you struggle with what is too much or what is not enough. We know by now that this is a big play, and therefore we can't settle for 30 usual pips. It's good to secure. Obviously, the initial partial is good to secure, but I know that we have more to come from a play like this, and therefore we do have to secure a lot more on, say, next target. So for this, I will have to have this in the back of my mind, because it depends if we react from it on the way down or not as well. But if we do, there's a bigger chance of us reacting it on the way up. If we take from the top of the area, that would be 100 pips. From the low of the area, that would be over 150 pips. So that's a pretty decent target, that is. So that could be most of your target or a good portion of your target one. Because target 2 final target will be no less than either the previous week there or the 50 fib. I think that's also, if you're looking at the most recent move down, I'll go on an average middle there. That is also near the 23 fib, which is quite, seeing the aggressive nature all the way down, which would be very possible to be a struggle, and the 38 is quite big. So the 38 is a big ask, in my opinion, passing the 50 and going to the 38 area. But it could be happening. That could be happening for sure, obviously. I'm just saying that I like to cover most of my profit there. So let's say initial target is either EMA or the 23 fib. And final target is either the 50 or your 38 if you want to push it quite far. So that's for me a way to see your potential target. And if you see potential target like this, what you'd be doing then, because we're thinking that they do match, at this point we have no clue, but I'm pretty sure, having experienced that for the past 12 months, that this is an area that should react similarly at the same time. If that does, this should be pushing harder, so it doesn't seem like quite the area for a reversal, but I believe we would reverse quite significantly on gold, and therefore what we'll be able to do is same thing. So for me that's probably the best fib to look at there. Again, I'll just take an average over the fib. This is a no-brainer to me. This has been rejected and it's just below the 38, so fair to assume that this area there would be a big area for our gold play to breach, and that is 1,000 pips away. So this is definitely my final target if I'm still long. So that's my final target. So where to aim for the therefore initial target? I think I'll play like this with a zone that is quite big, relatively big, around 100 pips. So this would be a split pending, and that will be covered again. Something we'll cover on the, I would like this first to play out just to see, and then cover that. But one of the part of this update will be also the scale in and the scale out of a trade. So scale in. So a trade like this typically will be with two pendings, one on top of the box and one on the lower end of the box. And depending how we tackle it, the entry of the box will probably be smaller. Even it's either a split pending 50-50, or you do like 30-70 if they are quite big and you don't want to get yourself into a bigger drawdown on the first pending, waiting for the second one. It depends the way you want to do it. But I'll cover all the variation of the scaling in on the trade like this. So just say that if we get this, I think for me, minimum target, something like this would be the 90-100 pips, which is pretty much the size of the box. So if you react from the top of the box, I get 90 pips. This is my initial TP, and I'll explain the scale out. And therefore keep a good portion, and we would struggle on the 23 for sure. That's for sure. But I don't think that's where I would want to TP. I think that's pretty easy to go. That's 200 pips more, so it's possible to be grabbed, and that's just below the level there, and you've got the 38 coming. So yeah, I would go there. I would aim there, and I would leave a good portion of my runner running on this specific trade, basically. So what we'll do on this trade, we will monitor it, and I will join back this update. So in this video you won't see any difference. That will happen quite quickly. It'll be in the next few seconds. So what we will do, sir, I'll just wait to see how the trade play out, and we carry on the analysis as we tap into this, and to see what's the likelihood of a strong reaction if you do react, and break it down to you, and try to do the same for the next potential good trade, so that you fully assimilate the sink in of a couple of currencies. And what we'll do on the next video is we'll do another sync type of play on currencies this time, so that you do see it with the currency market and not the metal market. I do trade the metal market quite a lot with this, but I want to show it to you as well on the currency market, so that it's helpful to you, and that you've got this added tool to your arsenal to tackle the market efficiently. So we catch up in a bit to the updated of this area. We join back the chart on gold, and we are getting awfully close to our buy area. Quick tip before we get started. You've noticed I've been doing that for a while now, and I'm doing it in the video. Every analysis I make them on the Sunday, and there is a couple of reasons for that, but the main reason is the market is shut down. Does that mean for me two things? When the market is closed, I'm not influenced, I'm not biased by movement of the price. So that is not corrupting my technical analysis by giving me a fake outlook or direction on the market. Second, it makes things easier, because if you're doing some of the stuff we are doing, like Fibonacci retracement, Fibonacci extension, stuff like that, this can be quite tricky if the price moves and you have to readjust constantly. So I do prefer to do that on Sunday, and I do prefer to do it on Sunday, because it's usually a quiet day for me, and it gets me in a perfect position on the market to get started on a Monday, having all the work done prior. So I don't like to do that midweek, because I'm quite late in the market movement and quite late in the money movement, because usually the moves are made on a weekly basis, so from a Monday to Friday. So I like to be prepared ahead, and it's a small sacrifice to just use 1 hour of your Sunday to just get all the work done. Believe it or not, most of the work is done on Sunday for me, and it's just a matter of monitoring 5 minutes here and there the whole market throughout the week, unless there is a major change. So strongly advise you to get started to do all your routine on a Sunday, get a set time for your analysis and stick to it. Get it into your weekly routine. So, if we are looking at our gold chart now, we are hopefully close to the buy area we've been waiting for. So the purpose of this video was to show the all Techundamental things, so which is basically lining up pairs that are correlated in nature. So metal market, they are correlated by the nature of the metal market, which is a safe type of asset, so safe haven asset, and they are against both the US dollar, so they are highly correlated in this example. The whole purpose of this video breakdown is just to see how we use the sync, the lining up of this pair to our advantage. So usually we'll do the sync in order to get a bigger trade, because it's usually a fundamental trade, so there's a bigger movement from the linking the two pair, and higher road of success. As we speak, this example is not working out the way we want, but it will, I believe, work out the way we want, because we have a strong area there. Why it's not working the way we want? Because if you're looking at, it's actually a good example, silver right here. Silver is already in our buy area, so I'm already long silver. I was saying earlier in the video, the previous one, that the silver usually leads the way. What does that mean? It does mean that very often silver will make the move slightly ahead of time, giving you an insight on what the metal market is doing. So for example, if you were looking to get them linked and synced to a 38 fib, and silver was reaching the 38 fib before gold and reacting from it, it will give you the insight that if silver reach the 38, it's likely to work. So that's the way I interpret this, and that's the way I use it. So in this example, we have reacted slightly lower than the entry, but within the buy area, which is a big area because it's a big level. Remember, it's from the monthly, so you go in the previous video, monthly level, we are expecting this to be a significant move reaction from this. So far it's been quite disappointing, because for me personally I scaled that in, so this is going to be covered in the part of the scaling. I really like this whole play because it will be it will enable me to show you the whole 50cal update throughout the play. And one of the things that you guys were looking for is scaling in and scaling out of a trade. So I'm currently being scaled in the trade. So I've been triggering on the earlier position there, but not the lower one. And we shall see if we get the lower one, but by the look of it, I doubt we'll get the lower one. Anyway, just to say that currently for me this trade is not running much, because I'm long from the entry and it's just wait and see. But this is a monthly play. I know it can take a few weeks to get this type of move moving, and so I'm not worried. We need to grab the liquidity in order to get the momentum in the right direction, which is what we are doing here. So in this example, it's actually good and bad. So they are not perfectly in sync per se, because this is still 140 odd pips away, so this is pretty much nothing. So you account for the dollar move on the silver market. Usually you tie that up to a $25 move on gold. So if you take the correlation for this, so that move from 19 to 1850 is about the same move as what you get there. So if this is slightly behind, this is telling me slightly behind, but I get to have already an insight that this zone has reacted. So this could be meaning a couple of things. That's the experience of lining up there. It could tell me two things. So the main things it could be telling me is that if we get into this zone, it will work because silver has reacted, and for as long as we have silver staying in the zone or above, not breaching lower, but staying. So for example, what I would, for me, something I will do is that we've got a reference low now on this, and because we've reacted and started to move up outside the box, it's unlikely that we go breach that low. Unlikely doesn't mean that we are not. It's unlikely for a couple of reasons, and the main reason is that this hasn't joined yet. So if it was to breach lower, it would mean that likely this will fail, and it's kind of warning me that this is pretty much a no-go in terms of odds of success. However, with all the technical I've got, this is something I would still try. This is just increasing my odds of success, which I don't really need, but that's not the point here. The point is just increasing your odds of success for this specific trade, but giving you the confidence of a longer term play, which I believe that if we do think in the whole thing, we will get this longer term trade. So for me, looking at this, I think this is a reference low we've made. We're still above the monthly confluence. We're still within the area of confluence. It's a monthly chart, so I'm very comfortable with the fact that it can take a few days working around the area. And probably because it just didn't reach on the Friday, because on Sunday it's closed, so the market has closed on Friday, because it didn't reach on Friday for gold and it reached on silver. It could tell me that for the week coming, this might be staying around the level for gold to catch up to the area and then both react simultaneously. And this could be the next Friday. So that's ideal case scenario, obviously. So timing and the sync are the two biggest things in my trading. So lining up pairs and the timing is key. So if the timing is right, it could make a good move. So for a move like this, I like to see it either on Wednesday or on Friday afternoon. Friday afternoon will be a banger, because if we have gold coming to our zone, this stayed around, and we're coming to Friday, I know the move is over, and there is a very likely chance that on US session on Friday we start moving, so that it preps the move for the week ahead, and therefore deliver the move I'm looking for. So on this price there, we started to move. It's still lined up for me because it's not quite there, but it's within reason because it's a bigger, wider zone on silver, and it's a monthly. This is from a smaller, well, some of them are monthly, but some of them are daily and weekly. So nothing to be worried about for this play. We've added a confluence that we didn't see before. This is covered in the Fibonacci extension. We also now have on this area the minus 38, which is the mirror image of the 38 retracement from this on the extension. So if you're looking at this fib, we didn't have that before, but we can add it. So if you're looking at this fib there, we've had the 23, 38, actually 38 is there. The 38 pullback retracement that breached and delivered to the 38 extension. So we are, and you see how much it breached before working. So we're still within the area of interest there. So that is for me a good thing, and an added confluence we didn't cover before. So we are already within an area of interest. I was saying one of the things that could be happening, it's that we could be, if silver was to pick up now, we could be missing the area, and this could be starting its uptrend. So one of the things with silver, because it moves ahead, we have to be careful with not missing the potential trade. So for that reason, on the opening on the session later, tonight when it opens. If it opens lower, and if we have to go back on the level there, I might enter if silver stays and doesn't get too much lower, or definitely not lower to where it is, because this could mean that it has the potential to reverse from there and therefore miss my area. But with the fact that we've reacted pretty nicely to the C area there at the 1700, we should be going lower to grab more liquidity, which is just the way the market moves, going lower for a liquidity grab, and then we start the reversal. So for now, they are still lined up, they are still in sync, and what is going to be our next move is just to see where basically silver is going, and if gold has tapped into our area. So basically, to sum up, as this started to trend up or stay within the area and not made lower and have not breached the buy area, while this has reached the area. If it's the case and this reached the area and silver is still in play, this is now definitely in line and in sync with the market, and silver having reacted, I would expect gold, when it goes there, to do the similar reaction. And then it's up to if silver start to pick up and make new high. So for example, if we were to see something like this and then make a new high, because we've a slightly double bottom type of pattern, then by making a small new high, then I definitely have the momentum to the upside for the metal market. And if this is within our buy, then I know I've got my trade going, and we set for our trade the way we just described it, and we just follow the momentum and we go to the next target basically. So we'll see where we go with this potential trade, but so far it still looks like they are in line, and I'm going to try to demonstrate that once they perfectly line up, they do reach a bigger potential and better odds of success. So far for me, so silver is working, but gold is slightly behind, so it's not the perfect lineup we want, but it also demonstrates the case that I was saying that silver is often ahead of gold and can give you a good insight into what the possible metal market is about to do.
Thanks for watching, guys. Don't forget to comment, like, and subscribe.